Yes, sir. Very happy morning to all. I hope that your preparations for the group 2, especially costing, is going very well. Tomorrow is our examination, my dear lovable students. For your exam, this is the fourth video I am doing. My dear lovable students, with regard to costing, we have already told many times that the first chapter நம்ம செம்மையா படிக்க வேண்டியது cost sheet. We have already revised the cost sheet for your exam and I have made a document which is relevant RTP and MTP for your attempt. That has done as first video till now. If you have not completed that, go and complete that first. Number 2, the second one is a cost accounting system. This is a easy 5-mark area for exam. Don't miss that chapter, cost accounting system. In this, I am going to complete the cost accounting system, RTP and MTP. Yes, sir. The third one is process costing, one of the most important topic for exam, which may ask for 10 mark in exam, my dear lovable students, process costing. Don't miss the preparation of the process costing. I have uploaded the video for the process costing. Please go and visit and complete that video also. Revision video. Fourth one, join product and byproduct. Yesterday I have uploaded join product and byproduct, my dear lovable students. So this itself will carry at least this for 10 mark and at least this for 10 mark. Sure shot 5 mark and another 5 to 10 mark. So this is surely a 30 mark area for examination. 30 mark area for examination. So in this slot we are going to talk about cost accounting system. A very quick revision plus the RTP MTP videos. My dear lovable students, if a concern is a manufacturing concern, they will maintain 2 set of books of accounts. 2 set of books of accounts maintain பண்ணுவாங்க. One financial accounts and number 2 is cost accounts. Number 1 is financial account and number 2 is cost accounts. Sir, in financial accounts, they will record only financial aspects. In cost accounts, they will record only cost aspects. These are the 2 set of books of accounts. Certain people will record both financial accounts and also cost accounts in one set of books of accounts. That is called as integrated maintenance of books of accounts. If it is integrated maintenance of books of accounts, one aspect will be costing and other aspect will be accounts. So அப்ப எப்படியெல்லாம் books of accounts maintain பண்ணலாம், books of accounts ரெண்டு விதத்துல maintain பண்ணலாம். ஓகேவா? Number 1 is integrated maintenance of books of accounts and non-integrated maintenance of books of accounts. My dear lovable students, if it is integrated maintenance of books of accounts, one aspect and the other aspect. One aspect and the other aspect. ஓகேவா? One aspect will be accounts and other aspect will be costing. That means if the system is integrated maintenance of books of accounts, there will not be no 2 books of accounts. Hence reconciliation concept will not be applicable. Whereas if the company is maintaining non-integral, that means financial accounts separate and cost accounting separate, both the books will show 2 different profit. So we have to reconcile why there is a reason for the difference in profit by way of preparing reconciliation statement. That is one very important area for examination, my dear lovable students. So with this background, we are going to solve the question from the cost accounting system, which is question number 12. Shall I start the proceedings, sir? Shall I start the proceedings, sir? My dear lovable students, shall I start the proceedings, sir? Yes. Following information is extracted as a result of the scrutiny of the figures from both financial accounts and cost accounting of CK Limited. So, CK Limited is a company. They are maintaining financial accounts separate and cost accounts separate for their under 31st March. In that, net profit as per cost accounts is 57,71,840. So what they have given is net profit as per, I'm starting man, net profit as per cost accounts is equal to 57 lakh 71,840. So I am not starting with the financial accounts. I am starting with the cost accounts. By starting from the cost accounts, I am moving to the financial accounts. I am going to explain what is the difference between the financial accounts and the cost accounts happen. Number one, under recovery of selling overhead in the cost accounts, 1,16,800. First, understand logically. I saw many people, many students, by hearting these two, don't do that. I will explain you very logical. That's my duty is all about, man. My dear lovable students, I already explained that there are two set of books of accounts are there. Number one is accounts and number one is costing. Number two is costing. In accounts, what we will record, in accounts, whatever expenses incurred will be recorded. For example, if I spend 5 lakh, I will record as 2 production overhead 5 lakh, 2 administration overhead 5 lakh, 2 selling and distribution overhead 5 lakh. That means production overhead, administration overhead, selling and distribution overhead. If you know this only, you will pass in exam. So I will record the pass on actual expenditure incurred. That means whatever I have really spent will be recorded in the accounts, because I will start recording from financial accounts from 1st of April, my dear lovable students. I will be recording till 31st of March. I want to know the real profit or loss during the year. When and where the transaction is happening, I will be recording the transaction, because the purpose or the objective of financial accounts is find out the net profit, whatever profit earned by the concern. But the objective of costing is not only to find out the profit, but to stock valuation is a major thing. Stock valuation in the sense means, don't think that in costing stock means closing stock. Stock means closing stock, that is in accounts. In costing, unit produced is equal to stock. For example, if I am manufacturing of a pen, if one pen has completed its manufacturing, it is ready to sell. That means I should know the cost per unit, my dear lovable students. So this subject serve the purpose of stock valuation. This subject serve the purpose of stock valuation. So in order to find out the cost per unit, I have to prepare the cost sheet. Cost sheet is saying that in order to manufacture a product, you have to incur the material. That material may be direct material and indirect material. Direct material form part of the prime cost and indirect material form part of the factory overhead. Comfortable? And sir, with material alone we can't manufacture the pen. We need laborers or machiners to work on that material. That's what direct labor. If the labor is direct labor, it will come and sit in the prime cost, whereas indirect labor will go and sit in the factory overhead. And direct expenses, sir, if an expenses is not direct material, not direct labor, it will be categorized as direct expenses if without incurring that expenses, if you can't make the production. Example like royalty, which I have already explained in the earlier vision videos. So my dear lovable students, you will get the prime cost. Fine. Till now, per unit is available. Till now, it is directly attributable to pen. Till now, it is easily traceable. Till now, I can say that this much is the material, this much is the labor, this much is the expenses, or this much is the prime cost per unit. Till now, whatever costs are variable cost, my dear lovable students. Fantastic to the course, sir. Add factory overhead. I have to add the factory overhead. Here the problem starts. Here factory overhead means indirect material plus indirect labor plus indirect expenses. This has to be unitized to this product pen. But I don't know how much is the indirect material, indirect labor and indirect expense in total or in actual. That I will know only on 31st of March. But till that, I can't wait, my dear lovable students. Because I am not going to value the closing stock on 31st March. I want to value each and every unit which I have produced. Each and every unit which I have produced. So in order to know the cost per unit, once my final product comes out of my machine, it is ready to sell, I have to know how much is the factory overhead per unit. For that, remove that difficulty only. We are having the chapter overhead. The overhead chapter is telling that, sir, you have to follow absorption costing. You have to follow absorption costing. In the sense means you have to absorb the overhead. So my dear lovable students, how to absorb the overhead? I have to find out the standard rate. This is not the actual rate. This is the standard rate. This is the standard rate is equal to budgeted factory overhead divided by budgeted output, or budgeted factory overhead divided by budgeted hour. Either based on the output or budgeted hours, you have to absorb. You have to absorb the overhead. Only this overhead will be absorbed to the product, because production, administration and selling, these two are period cost, and this is product cost, my dear lovable students. The share of the first overhead will go and sit in the sir, inside the stock valuation, whereas administration and selling will directly go and sit below the stock valuation item that you already know, I suppose. So my dear lovable students, sir, for example, the standard rate is, sir, 10 lakh. For example, the budgeted fixed overhead is 10 lakh. And you thought that, you budgeted that you are going to manufacture 1 lakh. So basically 10 lakhs divided by 1 lakh means you assume that 10 per unit is a standard rate. 10 per unit is a standard rate, right? Then you will start preparing the cost sheet. You tell me, in the cost sheet, you will write direct material, direct labor, direct expenses. You will get the prime cost. Add factory overhead, you will write it as 10, because for every 1 unit produced, 10 rupees is the share of factory overhead. Share of absorption. Comfortable? Share of absorption. So you will be valuing the stock like that. You will be getting the cost of production. To that you will be adding general administration overhead. You will be adding selling and distribution overhead. You will be getting the cost of sales, my dear lovable students. From that you will be adding the required profit. You will be getting the sales value. At that sales figure you will be selling 1 pen. At the year end, sir, what you will be seeing, you understand that instead of 1 lakh units of output, you have manufactured only 90,000 units of pen. That means every pen would have absorbed 10 per unit. That means 9 lakh will be the total. This is per unit column in the cost sheet. No, for the entire year, the total direct material means number of pens manufactured into material cost per pen. You will get some total here. Direct labor means, sir, number of labor cost per unit per pen into number of hours worked by the laborer. Direct expenses means royalty paid per pen into number of, sir, royalty, total pens manufactured. Sir, ideally, the expenses what you have incurred for the material, labor and the direct expenses as per the financial accounts and also as per the cost accounts will be one and the same. Because whatever actually spent would have recorded in the accounts and whatever actually incurred would have been written in the cost sheet. But this is not with regard to the, sir, factory overhead. Assume really factory overhead incurred is 10 lakh. Actually, what I am supposed to do in my cost sheet, in my cost accounting system, I should absorb 10 lakh. But I will know this only at the end of the period. So what I have done, I used a technique in the chapter called as overhead. In that, I used to start absorbing the, sir, absorption process. So 90,000 into 10 comes to 9 lakh. You tell me, in place of 10 lakh, I have absorbed only 9 lakh means there is a short absorption of 1 lakh. This is called as under absorption. This is called as under absorption. So, practical thing it, if there is under absorption, my dear lovable students, automatically the expense booked in the costing will reduces. If there is under absorption, expenses booked in the costing will reduces. Because instead of, sir, absorbing 10 lakh, you have absorbed only 9 lakh. Getting it, enjoying the concept. So, Don't say that under absorption minus over absorption plus that by heart and all will not work in our subject costing. Costing means logic. Learn the subject very logically, my dear lovable students. So, my dear lovable students, if the situation happened to under absorption, it will lead to, sir, underbooking of expenses in the cost accounting system. So, because of booking less expenses in the cost accounting system, your profit increases. Because in costing, if the expense reduces, profit increases. Am I right, sir? Now read the second line. Under recovery of selling and distribution overhead in cost accounts. So, because of under absorption, cost of sales would have reduced. If the cost of sales reduces, my dear lovable students, automatically profit increases. Because if the expenses reduces, profit increases. Profit increases. So, 1,16,800 rupees, sir, I have underbooked in costing. But 1,16,800 would have been, sir, overbooked in accounts. If our starting point costing, we will think only from the costing angle. That means, my dear lovable students, under recovery of selling overhead in cost accounts means 1,16,800 is there. This cost accounting la kammiya nama expense book pannirpom. Anga expense kammiyanadunala profit adhigama irukum. Adhigamaga koodadu, we have to minus it. This is a logic why under absorption is reducing. I hope that you are able to appreciate or understand. If yes, if you are clear, sir, put in the comment box that, sir, I got it, sir. Fantastic, sir. Superb, sir. Undervaluation of closing stock in cost accounts. As we all know that we are having trading account. Trading account, we will write the closing stock, my dear lovable students. Closing stock order value adhigamachana, automatic gross profit adhigamaidu. Closing stock order value kammi achana, automatic gross profit kammi aidu. What has happened here? Undervaluation of closing stock in cost accounts. Cost accounts la closing stock order value kammiya irukku. Kammiya irukna automatic profitum enava irukum, kammiya irukum. Kammiyaga கூடாது. Hence, we have to add it back to the profit of the costing. Comfortable. Rent received credited in financial accounts. Why? Because this is the financial item. Financial item will be credited only in the financial accounts. So, because of that, profit as per accounts will be more as compared to profit as per costing. Now, in order to tally the profit, recognize the differences, my dear lovable students, this has to be manually added in the cost accounts. This will never be credited in the cost accounts because costing profit means operating profit, which is EBIT. This is non-operating profit. Non-operating profit will come only in accounts, not in costing. What a clarity, sir. Bad debts provided in financial accounts, sir, this would have been debited in the financial accounts, but this will not come in cost accounts because this is a non-operating expenses. Only operating expenses will come and reflect in cost accounting. Fantastic, sir. So, இதை நம்ம இன்னும் என்ன பண்ணல, டெபிட் பண்ணல. அப்ப இந்த எக்ஸ்பென்ஸ் காஸ்டிங்ல புக் பண்ணாததுனால profit as per cost accounts would be more. அதிகமாக கூடாது. ஸோ நான் இப்போ எக்ஸ்பென்ஸை புக் பண்ண போறேன். அப்ப ப்ராஃபிட் கம்மியாகும். Income tax provided in financial accounts. Again, this is a non-operating expenses. Non-operating expenses will not come in the costing. Will come only in accounts. So if I book this expenses in costing, profit will reduce as my dear lovable students. Again, under recovery of administration overhead in cost accounts. I already explained what do you mean by under recovery. In accounts, we will record whatever expenses we have actually incurred. Whereas in costing, we will record whatever has been absorbed. If that absorbed amount is less than the incurred amount, we will call such a situation as under absorption. Because of under absorbing the overhead, generally overhead means expenses. Because of under absorbing the overhead, my dear lovable students, automatically the expense as per the costing will less and profit as per the costing will be more. profit அதிகமாக கூடாது. So I have to reduce it. You are required to prepare a statement of reconciliation showing the profit as per financial records. They want what is the net profit as per the financial records. You tell me what is the net profit as per costing 57,71,840. Under recovery of selling expenses. Expenses under recover ஆனதுனால expenses கம்மியா இருக்கும், profit அதிகமா இருக்கும், அதிகமாக கூடாது, minus 1,16,800. Super. Under valuation of closing stock. Closing stock ஓட value கம்மியானதுனால profit கம்மியா இருக்கும், கம்மியாக கூடாது, so plus 1,64,000. Super sir. Rent received credited in financial accounts. Since this is a non-operating income, அது accountsல மட்டும்தான் வரும், costingல வராது. costingல வரணும்னா we have to add 87,000 sir, 200 my dear lovable students, so plus 87,200. Bad debts provided in financial accounts. This is a non-operating expenses. இது accountsல மட்டும்தான் வரும், costingல வராது. அப்ப reconciliation purposeக்கு இந்த expense நீ costingல book பண்ணேனா profit as per costing should reduce sir. அதனால minus 52,000. அழகா என்ஜாய் பண்றியா? Income tax provided in financial accounts. This is again a non-operating expenses. இது accountsல மட்டும்தான் வரும், costingல வராது. அப்ப அதனால accountsல profit கம்மியா இருக்கும். இப்ப நான் costing ஓட profit சரி பண்ணனும்னா if I book any expenses profit will reduce man. So minus 2,54,400. Under recovery of administrative overhead in cost accounts. Accountsல expense will be actually incurred, whereas in costing expense will be actually absorbed. If the absorbed overhead is less than the incurred overhead, such a situation is called as under absorption. Under absorption will lead to booking of less expenses in the costing. If the expenses are less, profit will be more. Profit should not be more, my dear lovable students. Profit அதிகமாக கூடாது. So minus 1,50,400. You will be getting 54,49,440. Sir, I have explained very logically for you, my dear lovable students. This is how we are supposed to do the reconciliation. Why and what and how I have explained. I hope that you are able to enjoy the discussion of the integrated and non-integrated. If yes, comment in the comment section that, sir, great discussion, sir, fantastic to the course, sir. I'm moving, my dear lovable students, to the next question. Generally, if you see any faculty, they will say that reconciliation means, sir, cost accounting system means reconciliation, including me. But in our RTP and MTP, we are having one question from the ledger accounts. So we can't avoid or omit that area that may also be tested in examination. In my regular lectures, regular class, I have discussed all the ICAI questions. So I believe that this will not be a surprise for you, sir, if you are following me. Fantastic to the core. Following information has been extracted from the cost records of a manufacturing company. Manufacturing company cost record. Stores opening balance 9,000. Sir, WIP opening balance 18,000. Finished products, sir, there is no opening balance has been given. They want stores ledger control account, WIP ledger control account, overhead control account, and costing P&L account for 5 mark. So the worth of this chapter is how much mark, man? 5 mark. My dear lovable students, simple. Stores is an asset account. Stores is a real account. WIP is a real account. Finished goods is a real account. Finished goods is a real account. All assets will be having debit balance. அதனால stores ledger control account debit side to balance brought down 9,000, which is nothing but the opening balances. Are you all really with me? So my dear lovable students, purchases 48,000. Purchases 48,000 means what will happen to the raw material in the stores? Raw material in the stores increases. Either cash will go out, or I am liable to pay to the creditor, or if I am purely maintaining only costing, I have to credit the cost ledger control account. Cost ledger control account. Or general adjustment ledger control account. Cost ledger control account is otherwise called as general ledger control account. General adjustment ledger control account. So what is the journal entry I will pass? Stores ledger control account debit. Why? Because the raw material in the stores will increases. To general ledger adjustment account 48,000. Now in the general ledger adjustment account, they have not asked that ledger. So leave it, my dear lovable students. I have to credit it as by stores ledger control account. Comfortable? This entry, super sir. Transfer from WIP 24,000. That means for what purpose you are purchasing the raw material? To issue to the production. Production represent WIP. So you have excess issue to the production. Now from the WIP they are returning to the stores. What will happen? Raw material in the stores increases and raw material from the WIP decreases. So you have to pass a journal entry that source ledger control account debit 24,000 to WIP ledger control account 24,000. So the material available in the factory reduces. That is work area reduces basically. So WIP ledger control account la credit side la I will write by stores ledger control account 24,000. Now in a different transaction, sometimes the WIP, that is the work area, would have asked some other different raw material. That's why issue to WIP 48,000. Then what will happen to the raw material? Raw material in the WIP increases and raw material in the stores decreases. What journal entry you will pass? WIP ledger control account debit 48,000 to stores ledger control account 48,000. Appo WIP ledger control account la debit side la to stores ledger control account 48,000. Stores ledger control account la credit side la by WIP ledger control account 48,000 because the material gone out of stores. So whenever in any transaction if the material gone out of stores, I will credit the stores and whoever receiving I will debit them. Super sir. Issued for repair. Repair is not a prime cost. Repair is not a prime cost. I will be having indirect material which I have issued to the production department for sir the repair purpose 6,000. So the production overhead increases and the balance in the stores reduces. So in the stores ledger control account, I will pass the journal entry that overhead control account debit. Overhead means production overhead. They have not specifically told that whether it is production overhead or administration overhead or selling or distribution overhead. Generally overhead, sir, since I am manufacturing without incurring production overhead, I can't complete the manufacture. So my dear lovable students, production overhead control account debit to stores ledger control account. Appo overhead control account la debit side la to stores ledger control account 6,000. Stores ledger control account la credit side la by overhead control account 6,000. Comfortable sir. Now deficiency found in stock 1,800. That means in the stores 1,800 rupees stock is deficient. Shortage. In question they never or nowhere said that this deficiency is because of abnormal reason by way of theft or fire or such things. If that is the case, this is a normal loss. Surely there will be normal loss because if you are, my dear lovable students, sir, keeping certain raw material inside the stores, surely some raw material will break down. Surely some raw material will decay. Surely some raw material will rust. All these things will be happen. Without that, you can't store this much of raw material inside the stores. So, without normal loss, we can't make the production. In the process costing itself, we have learned that the cost of the normal loss should be absorbed by the good units. Good units. So your deficiency may be because of normal loss or abnormal loss. If the deficiency is because of normal loss, my dear lovable students, it should go and sit in the WIP ledger control account. WIP ledger control account, direct loss. Right? Sir, if it is abnormal loss like, sir, fire, theft and all, it should go and sit in the P&L account. That is costing P&L account. Let me ask you a question, my dear lovable students. If this normal loss of, sir, 1,800 has been charged to the WIP, only the direct material and direct labor and direct expenses should be charged to the WIP. And we will be absorbing the overhead, right? This 1,800 cannot be expressed as per unit, which is not directly attributable to what? Production. But this is a normal loss, but this is not an abnormal loss. If it is an abnormal loss, I would have debited in costing P&L account. So since this is normal loss, instead of directly charging to the WIP, better to charge better to debit to the production overhead. Are you all really with me? And from there, I will be absorbing to the WIP, man. That's why overhead control account debit 1800 to source ledger control account 1800. So overhead control account debit side to source ledger control account. So you will be having normal loss or abnormal loss. Normal loss are charged to the production overhead. Treat it as production overhead. What is the entry? Production overhead control account debit to source ledger control account. If it is abnormal loss, costing P&L account debit to source ledger control account. I believe that now the concepts are very clear with regard to the stores. That's it with regard to the stores, my dear lovable students. எப்படி நம்ம எழுதுவோம்? குயிக்கா source நம்ம ஃபைனலைஸ் பண்ணிரோமா? source நம்ம எப்படி எழுதுவோம்? opening balance, source ledger control account debit side to balance brought down 9000. Purchases, source ledger control account debit to general ledger adjustment account. Transfer from WIP, source ledger control account debit to WIP ledger control account. Issue to WIP, WIP ledger control account debit to source ledger control account. Issue for repair, production overhead control account debit to source ledger control account. Deficiency found in stock. Since nothing has been mentioned in the question, we will assume this as a normal loss and not an abnormal loss. Since this is a normal loss, my dear lovable students, normal loss, sir, will not directly go and sit in the WIP, will be indirectly go and sit in the production overhead. From there, we will absorb. So, production overhead control account debit 1800 to sir, stores ledger control account 1800. I believe that you got a very good revision of the stores. Coming to the WIP, my dear lovable students, opening balance 18,000. So, WIP ledger control account debit side to balance brought down 18,000, you will pass. That's what happened here. WIP ledger control account debit side to balance brought down 18,000. Comfortable. Direct wages applied. Direct wages applied means from the wages control account you have taken to the WIP 18,000, my dear lovable students. So what entry you will pass? WIP ledger control account debit to wages control account 18,000. So WIP ledger control account debit side to wages control account 18,000. Getting it up? Because when you incur the wages overhead, you will be writing the entry that wages control account debit to general ledger adjustment account. From there you will be having, so wages control account will be there. From there you will be having direct wages and indirect wages, right sir? The direct wages will be go to the WIP ledger control account and indirect wages, my dear lovable students, will be gone to the production overhead control account. Getting it? Fantastic, sir. Overhead charged 72,000. Charged means what? Absorbed. From the production overhead control account, you have absorbed 72,000. That means the WIP will be increased by 72,000 and the production overhead will be decreased by 72,000. So what is the entry you will pass, my dear lovable students? You will pass the entry that WIP ledger control account debit 72,000 to general overhead, production overhead control account 72,000. That's what by WIP ledger control account. So how this WIP ledger is working? To opening, to balance brought down means opening WIP. Stores ledger control account means direct material. Wages control accounts means direct labor. So basically you will be getting prime cost here, which is nothing but opening stock of WIP, add direct material, direct labor, etc. Right, sir? Fantastic, sir. Sir, add, after doing that, we will be doing the production overhead. You look at here, cost sheet. You'll be able to see the cost sheet here. I will show you, sir, which is nothing but direct material. I can say here as, sir, direct material. This is direct labor. Direct material plus direct labor, we will get the prime cost, right? Add factory overhead. You will get the gross factory cost. To that gross factory cost, we should add opening stock of WIP. That's what, sir, I am getting 1,56,000. From that, I should reduce minus closing stock of WIP. What is the question they are talking about? In the last one, sir, closing balance is 12,000. So I have totally incurred, my dear lovable students, 1,56,000. In that 1,56,000, still 12,000 rupees goods are not fully completed. That means it is closing WIP. It will not move to the, sir, finished goods control account. So 1,56,000 minus 12,000 and 24,000 rupees material has been returned to the stores. That means from this 48,000, only 24,000 has been used to balance. Are you all getting it? So, my dear lovable students, 1,56,000 minus 12,000 closing WIP minus 24,000 return means 1,20,000 rupees of, sir, work has been fully completed. and it should be transferred to finished goods control account, but the question did not ask us to prepare the finished goods control account. So I have prepared the costing P&L account. That NSR 1,20,000 has been transferred to the costing P&L account to WIP 1,20,000. I hope that you are able to appreciate or understand this in a very better way. So how we have dealt the WIP, my dear? Opening balance, WIP ledger control account, debit side, two balance brought down. Direct wages applied in the sense means what? Allocated from the wages control account. So WIP balance will increase. WIP ledger control account debit to wages control account. Overhead charged, that means we have absorbed the overhead from the production overhead. Automatically the production overhead reduces and WIP increases. So WIP ledger control account debit to production overhead control account. Closing balances, this much amount of closing WIP which is not fully completed is with us. That means that should be reduced because in the debit side every debit has been done. So by balance carry down, sir, 12,000. Automatically if you knock it off, you will be getting the, sir, finished goods, which instead of directly transferring to the finished goods control account, we are transferring to the costing P&L account, coming to the finished production. Entire production is sold. No closing balances of finished goods at all, at a profit of 10% on the cost from WIP. You tell me, my dear lovable students, how much is the cost from WIP? 1,20,000 is the cost from WIP. On that 1,20,000, you are adding 10% profit, means 12,000. So 1,44,000. 1,20,000, sorry, plus 12,000 comes to 1,32,000 is the selling price for which you sold the item. So in the costing P&L account, for generally what is the journal entry for sales? Debtor to sale, right? Or cash or bank account debit to sales. But since this is, sir, non-integrated, I will never use the word financial terms. So instead of cash or bank or debtors, I have to debit the costing term. That's why general ledger adjustment account debit to costing P&L account. That's why in costing P&L account, credit side by general ledger adjustment account 1,32,000, my dear lovable students, getting it. So 1,32,000 to 1,20,000 pochuna to general ledger adjustment account 12,000 is the, sir, profit, which is nothing, man. 1,32,000, sir, 1,20,000 mele 10% profit sollirukanga, right? What the remaining transaction? Wages paid is 21,000. Oh my god. The direct wages is paid is 21, that is actual, but you have absorbed is only 18,000, right? So idenga 18,000 da nam enna pannirkom na absorb pannirkom. So overhead control account there is an under absorption because paid is 21,000, sir, but the absorbed is only 18,000. There is a gap of 3,000. This is under absorption. If the under absorption, if you see the wages control account, my dear lovable students, to cost ledger control account or general ledger adjustment account, 21,000 will be there. By WIP control account, 18,000 is there. Automatically there is a debit of 21,000 and credit should also be 21,000. So there is a short credit under absorption. This should be transferred to the by what P&L account, man, costing P&L account. But first we'll be transferring to the overhead adjustment account. Then we'll be transferring to the costing P&L account. That's what overhead control account debit. Overhead control account debit to wages control account. Upper wages control account credit side by overhead control account. How much coming? 3,000. By that way it has been closed. I hope that you are able to appreciate or understand. That's it. Overhead incurred is 75,000, but I have charged only 72,000. Again, an under absorption of 3,000. That should be debited in the overhead control account, right? But, sir, adil na enna panna maatana, idu other accounts kadayadu. The ledger overhead control account da. So I will first incur the expenses. What journal entry I will pass? Overhead control account debit to cash or bank. But I can't use cash or bank. So overhead control account debit to general ledger adjustment account 75,000. So totally I have incurred, sir, 85,800. In this 85,800, my dear lovable students, I have absorbed 72,000. That is inclusive of everything. That means there is an under absorption of 13,800. I am having two options. Either I can charge that to the, sir, costing P&L account by way of under absorption, or I can keep it as by balance carry down, and to the next period I can write it to balance brought down. That's it with regard to that question. Brilliant 5-mark question. You just think, if you are logically able to think this, then, sir, nothing is there to by heart in costing. So, very quick revision, join along with me. Stores ledger, opening balance, every doing it. Stores ledger control account debit side to balance brought down 9,000. Purchases. Stores ledger control account debit side to cost ledger control account 48,000. Transfer from WIP. Stores ledger control account debit side to WIP ledger control account 24,000. WIP ledger control account credit side by stores ledger control account 24,000. Issue to WIP. WIP ledger control account debit side to stores ledger control account 48,000. And stores ledger control account credit side by WIP ledger control account 48,000. Issue for repair. Production overhead control account debit side to stores ledger control account 6,000. Then, sir, stores ledger control account credit side by production overhead control account 6,000. Deficiency found in stock. Have they mentioned that whether it is normal loss or abnormal loss? Nothing has been mentioned. That means it's normal loss. Normal loss should be treated as production overhead, my dear lovable students. So production overhead control account debit side to stores ledger control account 1,800. Stores ledger control account credit side by production overhead control account 1,800. Brilliant. Next, coming to the next ledger, WIP ledger control account. Opening balance to balance brought down 18,000. Direct wages applied to wages control account 18,000. Overhead charge to production overhead control account 72,000. By balance carry down, sir, 12,000. Automatically, in credit book panirkom. Balance should be transferred to the costing P&L account, which come to 1,20,000. Comfortable? Finished product. Entire production is sold at a profit of 10% on cost from WIP. So 1,20,000 plus 12,000 comes to 1,32,000, my dear lovable students. 1,32,000 means, hello sir, that much amount should be credited in the costing P&L account. Fantastic, sir. Wages paid is actually 21,000, but we have absorbed only 18,000. There is an under absorption of 3,000. The journal entry for the under absorption is either the overhead control account debit to respective, sir, overhead, or costing P&L account debit to the respective overhead. So this 3,000 difference should be debited to the production overhead control account, right, sir? And overhead incurred is 75,000. I have to pass the journal entry for incurring. Production overhead control account debit 75,000 to general ledger adjustment account 75,000. Out of this, put together everything, but I have absorbed only 72,000. It will lead to an under absorption. So under absorption means by balance carry down will come. That's it. We have prepared the stores ledger control account, WIP ledger control account, overhead control account, and costing P&L account. And we got 5 mark in exam. I believe that you are having a very level clarity with regard to the cost accounting system. If yes, comment in the comment box how much you are enjoying conceptually the discussion of the costing. Coming to the next question, my dear lovable students. This is another 4 mark area for exam. Very quickly we can knock it off this man. Following information is available as per the cost accounts of a company. Again, they are starting with the cost accounting only. Profit as per cost accounting is 7,77,150. Factory expenses undercharged, that means under absorption. What will happen to under absorption? If there is under absorption, the amount of expenses booked in the cost accounts will be less. If the expenses are less, profit will be more. Profit adhigamaga kudadu, so should minus it. Administrative expenses undercharged. Again, the same explanation. Profit adhigamaarkum, expense kammi aanadanaala. Expense kammi aana profit adhigamaarkum, profit adhigamaga kudadu, should be reduced it. Selling and distribution undercharged. Again, same explanation. Because of booking less expenses in costing, profit as per the costing will be more. Adhigamaga kudadu, hence it has to be reduced. Income from interest and dividend not adjusted in cost statement. Yes, it will never be adjusted in cost statement because this is a non-operating income. Sir, only the costing subject deal with the operating expenses and operating income. Since this is a non-operating income, it will be credited only in the financial accounts, not in the cost accounts, right? So if I record now this, it will increase the profit. You are required to prepare a reconciliation statement to ascertain profit as per financial accounts, my dear lovable students. I'm starting with the costing 7,77,150. Minus 2,35,500. Minus 1,17,750. Minus 31,400 plus 2,35,500. I will be getting 6,28,000 as a profit as per financial accounts. I believe that you are able to enjoy the discussion of the integrated and non-integrated. Shall I do the last question from this part? That's it, man. We are done with the revision, RTP, MTP revision of the this chapter. Which of the following is a correct journal entry as would appear in the cost books when there is under recovery of overheads? There is under absorption. What you will do with under absorption? Will you debit the respective ledger? No. Will you debit the respective ledger? No. Will you debit the respective ledger? No. I will debit the costing P&L account and I will credit the respective ledger. Why? For example, they are talking about administration overhead. For example, administration overhead is 5 lakh and you have absorbed by finished goods control account 4 lakh. So, you have actually incurred 5 lakh but you have absorbed only 4 lakh means that ledger will be having debit balance. In case of under absorption, that ledger will be having debit balance, right, sir? So, what you are supposed to write by costing P&L account, I will be charging that difference of how much lakh? 1 lakh. So, I have to debit the costing P&L to administration overhead, sir. Administration overhead. So, the answer is C. You are entitled to get 2 marks in exam. I believe that this is a very nice and a fantastic logical discussion of integrated and non-integrated. If yes, my dear lovable students, sir, we need your support. If you are enjoying, inform your happiness by liking the video and also inform by way of the comments and share with your friends who really need the revision of this chapter. If you need revision of any other chapter, RTP, MTP, just inform me by way of comments. Sir, tomorrow we are going to get 70 plus in costing. This time we have done a fantastic and a brilliant job. All the 15 chapters, my dear lovable students. I am wishing you all the very best. Quickly take, sir, some time to solve this question and come back. And if you need any other chapter support, just inform me. I am here. Thank you. Bye.